Hello everyone, today we are going to discuss about ratio analysis, and in this class we are going to see what are the different formulas are available for ratios and how it is applicable while solving the problem. So first of all, what do you mean by ratios? So ratio is nothing but it is a mathematical relationship between two variable or two item or two figure. So if you want to compare between two items, then ratio is an effective tool. So whenever there is a ratio analysis, there are certain formulas which is to be kept in mind. So first, we are going to see one by one formulas to calculate ratios. First is current asset divided by current liabilities into 100. That is for current ratio. The first formula is for current ratio. That is current asset divided by current liability. Current ratio. Then second one is liquid ratio or acid test ratio, or it is also known as quick ratio. So what do you mean by liquid ratio? Liquid ratio means those assets which can be converted into cash very quickly. So that is known as liquid asset. So formula for liquid ratio is equal to liquid asset divided by liquid liability into 100. See this. Now, liquid asset is equal to current asset minus stock and prepaid expenses. So if you want to get liquid asset, then from current asset you need to deduct stock and prepaid expenses, or else it becomes current asset. Then liquid liability, current liability minus bank overdraft. Bank overdraft is not a liquid liability, so that is why you are going to deduct from current liability. So that is about liquid ratio. Third one, stock turnover ratio. Stock turnover ratio, cost of goods sold divided by average stock into 100. So how to calculate cost of goods sold? One of the easiest formula to calculate cost of goods sold is equal to sales minus gross profit, or sales minus GP, or else cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. Then you will get cost of goods sold. Average stock is nothing but opening stock plus closing stock divided by 2. So by this you can easily arrive at stock turnover ratio. Next is gross profit ratio. Gross profit ratio is equal to gross profit divided by net sales into 100. Then net profit ratio, again, that is net profit after tax divided by net sales into 100. So you need to know the formulas before solving the problems regarding the ratios. So now debt equity ratio. So what do you mean by debt equity ratio? Long term debt divided by shareholders fund into 100, or else external equities divided by internal equities into 100. So what do you mean by shareholders fund? Shareholders fund includes preference share capital as well as equity share capital, reserves and surplus, if any, minus any fictitious asset. So that is represents shareholders fund. Then seventh one, capital gearing ratio. So capital gearing ratio is equal to fixed interest bearing funds divided by equity shareholders fund into 100. So fixed interest bearing fund here is preference share capital is a fixed interest bearing fund because dividend is given on the basis of certain percentage. Then debenture is also, again, there are certain class of debenture interest. Debenture interest is paid also on a certain percentage, and as well as long period loan or long term loan, here also loan interest is paid as per the certain percentage. Then equity shareholders fund, that is equity share capital plus reserve and surplus only. So capital gearing ratio formula now you understood. Next, debtors turnover ratio or debtors velocity ratio. Debtors velocity, debtors means it is regarding some sales. So net credit sales divided by average debtors into 100, or else total sales divided by closing debtor into 100. Closing debtor is a debtor given in the balance sheet at the end of closing date or closing year of balance. Then creditors turnover ratio. Net credit purchases. For debtors it is sale and for creditors it is purchases. So net credit purchases divided by average accounts payable into 100, and here average accounts payable represents creditors plus bills payable only. See, see this. Then proprietary ratio. So proprietary ratio is equal to shareholders fund divided by total tangible assets into 100. Here total tangible assets means all assets given in the asset side except goodwill and any intangible assets. And operating ratio, next one, cost of goods sold plus operating expenses divided by net sales into 100. So operating expenses means here selling and distribution expenses, administrative expenses, or else those expenses which is necessary to carry out day-to-day operation. So that and all expenses comes under operating expenses. Next is working capital ratio. Working capital to inventory ratio. Working capital to inventory means working capital divided by inventory into 100. Or else what do you mean by working capital? Or else working capital is equal to current asset minus current liabilities. Working capital turnover ratio, that is sales divided by working capital into 100. So in your syllabus, 12 formulas are given, and all these 12 formulas are important from the point of view of examination. And you need to go through all these 12 formula before solving any problems regarding the ratio. So now we are going to discuss 6 mark problem, which is frequently asked in the examination. So first one, current ratio is given 2.5 is to 1. Acid test ratio is given 1.5 is to 1. Current liability is given 4 lakh. Calculate current asset, liquid asset and inventory. For solving any problem, how ratios are represented? It can be represented by a fraction or as a by percentage or else in ratio itself. So I have solved the problem using percentage. You can do either way. You can use the ratio or else percentage is also good enough. So here first you need to calculate in this sum is current asset. Current asset means first you need to write the formula of current ratio. So current ratio is equal to current asset divided by current liability. And here in the problem they have given current ratio 2.5 is to 1. So current asset here specifically given in the problem 2.5. So what about current liability? That is given as 1. See, that is given as 1. So 2.5 divided by 1, that is 2.5 itself. But they have asked to calculate current asset. Current asset is equal to cross multiplication. Current liability into 2.5, you will get current asset. So current liability given in the question, that is 40,000 as a current liability. 40,000 as a current liability. So 40,000 into 2.5, you will get 1 lakh as current asset. So next one, liquid asset. You need to find out liquid asset. So that means you need to know the formula of liquid ratio or acid test ratio. So that is liquid asset divided by liquid liability. So here liquid asset given in the problem 1.5, liquid liability given in the problem, that is 1.5 divided by 1, that is equal to 1.5. Liquid liability means current liability except bank overdraft. So current liability minus bank overdraft. In this problem, bank overdraft information is not given. So liquid asset is equal to liquid liability into 1.5 cross multiplication. So if you do cross multiplication here, you will get the answer. That is once you calculate, that is 4 lakh into 1.5. Just we are going to check here. The time being 4 lakh into 1.5. Okay, that is 6 lakh. So it is not 4 lakh. Okay, This is 40,000. Liquid asset also 40,000. So current liability I have changed. Before it was 4 lakh. So it is actually current liability value is 40,000. So liquid asset 40,000 into 1.5 cross multiplication you will get 60,000. Then they have asked to calculate inventory. Inventory is equal to current asset minus liquid asset. So current asset you have got in first question and liquid asset you have got in the second question. Deduct about difference will be inventory. 1 lakh minus 60,000 you will get inventory as 40,000. You get inventory as 40,000. Yes. Here also see this 1 lakh minus 60 you will get 40,000. Yes. Now second problem. Second problem again similar type problem. Current ratio 2.5 is to 1. Liquid ratio 1.5 is to 1. Working capital 1 lakh 20,000. Bank overdraft 20,000. Calculate current asset, current liabilities, liquid asset and closing stock. Here they have asked both current asset as well as current liability, then liquid asset, then closing stock. So first you should know what is current ratio. Formula of current ratio, current asset divided by current liability, that is given in the problem 2.5 is to 1, that is 2.5 divided by 1, that is equal to 2.5. Working capital is equal to current assets minus current liability. Working capital ratio is nothing but current ratio. So here current asset 2.5, current liability 1. So 2.5 minus 1, you will get working capital ratio as 1.5. So in this problem, we are going to solve using working capital ratio. So current asset here working capital into current asset ratio divided by working capital ratio. Working capital is given in the problem that is 1,20,000 into current asset ratio just now we got that is 2.5 divided by working capital ratio. See, here we have got 1.5. So divided by 1.5 if you do you will get 2 lakh as current asset. Similarly for current liability working capital into current liability ratio divided by working capital ratio. Here we are taking working capital ratio as a base. So 1,20,000 into 1 current liability ratio that is 1 divided by 1.5 as a working capital ratio that is same you will get 80,000. See current liability ratio is 1, current asset ratio is 2.5 specifically given in the problem. Next is about liquid asset. So first of all, we need to know about liquid liability, that is current liability minus bank overdraft. So here current liability, whether it is mentioned, current liability just now we have calculated that is 80,000. So 80,000 minus bank overdraft given in the problem that is 20,000. So total will be 60,000. 18,000 minus 20,000 you will get 60,000 liquid ratio. Next is liquid ratio because we want liquid asset. So that is nothing but liquid asset divided by liquid liability. Liquid asset given in the problem 1.5 divided by liquid liability 1 that is equal to 1.5. So liquid asset is equal to cross multiplication liquid liability into 1.5. Liquid liability just now we have calculated current liability minus bank overdraft. So 60,000 into 1.5 you will get 90,000. Then closing stock. Closing stock is nothing but current asset minus liquid asset. So current asset information here 2 lakh that is first answer minus liquid asset. Liquid asset also we have got that is 90,000 as a liquid asset. So yes, liquid asset C 90,000. So 2 lakh minus 90,000 you will get 1,10,000 as a closing stock. So this is about 6 mark problem, and other problem also comes like asking 2 or 3 formulas to solve the problems of ratio that is very simple in nature for 6 marks. So one more problem we are going to solve of 6 marks. See, from the following balance sheet of Raman Limited, calculate current ratio, debt equity ratio and proprietary ratio. So liability side, share capital, reserves and surplus, secured loan, given long term, and creditors mentioned. Asset side, fixed assets, stock, debtors, and cash they have given. You need to calculate three of the ratio. First, current ratio. So that is very easy. Current assets divided by current liability into 100. So here current asset from the asset side, it will be current assets is stock, debtor, and cash. So 90,000 plus 1,05,000 plus 15,000 divided by current liability, only one information is given in the liability side, that is creditors. So 90,000, so you will get 233.33% as your current ratio. Next is debt equity ratio, long term debt divided by shareholders fund. Long term debt liability side, only one information about secured loan, so that you write 2,10,000 divided by shareholders fund. Shareholders fund means share capital plus reserves and surplus only. So 1,80,000 plus 1,20,000 will be your shareholders fund. So if you divide, you will get the answer as 70%. Then proprietary ratio, shareholders fund divided by total tangible asset. So shareholders fund, again in the previous formula we have calculated, that is 1,80,000 plus 1,20,000, 3 lakh, 3 lakh divided by total tangible assets. So total tangible asset means only fixed asset. In this information, only fixed asset information they have given, tangible asset only fixed asset information. So that you consider, you will get 76.92%. So other stock, debtors and cash is your current asset. That is your current asset. So this is of 6 mark problem. Now we are going to discuss about 12 marks problem. From the following statements of Grace Limited for the year ended 31st March 2015, you are required to compute the following ratio. So fixed ratio you are going to calculate. First one is current ratio, then liquid ratio, then operating ratio, then stock turnover ratio, then gross profit ratio, and lastly net profit ratio. In this problem, they have given balance sheet as well as profit and loss account. First, we will see the balance sheet item given in the balance sheet liability side. 1 lakh equity shares of 5 each, 5 lakh. General reserve is given 3 lakh. Profit and loss account 2 lakh. Creditors 2 lakh. Asset side, land and building is mentioned. Plant and machinery is given. Stock, debtor, and cash and bank information is mentioned. Profit and loss account for the year ended as on 31st March 2015 is also given. So here two opening stock, two purchases and gross profit information is available, and credit side buy sales and closing stock information is given. Then two office and administrative expenses, two selling expenses, two other expenses is also given in the profit and loss account debit side, and profit on sale of asset is also mentioned on the credit side. So total of the profit and loss account will be 9,25,000. By using this information, you are going to calculate the ratio. So first one is current ratio, that is current asset divided by current liability into 100. First, we want current assets, so go for the balance sheet information. So only three items, stock, debtors, and cash at bank balance is given as a current asset. So 3 lakh plus 2 lakh plus 1 lakh, that is 3 lakh stock and 2 lakh debtors and 1 lakh at cash at bank. So I write it here as current asset divided by current liability. Only one information about current liability, that is creditor, 2 lakh is given into 100. So 6 lakh divided by 2 lakh into 100, you will get it as 300%. Then liquid ratio, formula for liquid ratio is liquid asset divided by liquid liability into 100. In this problem, liquid ratio is equal to only liquid asset which can be converted into cash very quickly. So here, what you can convert into cash very quickly, debtor information is given and cash at bank information is given. So debtor plus cash at bank will be your liquid asset divided by liquid liability only creditor. So that is 2 lakh, 3 lakh divided by 2 lakh into 100, 150%. Third one is operating ratio. Formula for operating ratio is equal to cost of goods sold plus operating expenses divided by net sales into 100. So operating expenses is equal to selling and distribution expenses plus administrative expenses. So cost of goods sold. How to calculate cost of goods sold? That is sales minus gross profit. You will get cost of goods sold. Once you do sale minus gross profit, you'll whether you'll get cost of goods sold. Yes, that is sales information is 16 lakh, gross profit information is 9 lakh. 16 minus 9 lakh, you will get it as 7 lakh. 16 minus 9, you will get it as 7 lakh plus operating expenses. Selling and distribution expenses that is given in the problem. Office administration, selling and distribution. And what about other expenses? Other expenses is also operating expenses incurred, since it is not specified for what purpose it is used. So other expense also we are going to include under operating expenses. So 7 lakh plus 3 lakh 25,000 divided by net sales. Net sales information, whether it is given in the problem, that is total sales, that is 16 lakh directly mentioned. So divided by 16 lakh, you will get answer as 64.06%. Next is stock turnover ratio, that is cost of goods sold divided by average stock into 100. Cost of goods sold we have calculated in the previous formula itself, that is sales minus gross profit. You will get 7 lakh 16 minus 9. Then average stock, how to calculate average stock? Opening stock plus closing stock divided by 2. Here opening stock is 1 lakh, closing stock is 2 lakh. 1 lakh plus 2 lakh divided by 2, you will get it as 1 lakh 50,000. 7 lakh minus 7 lakh divided by 1 lakh 50,000 into 100, you will get it as 466.67%. Next, gross profit ratio. Gross profit divided by net sales into 100. Gross profit information directly given 9 lakh. 9 lakh, see, divided by net sales 16 lakh. 9 lakh divided by 16 lakh into 100, you will get it as 56.25% as gross profit. Net profit ratio. Net profit ratio is nothing but net profit after tax divided by net sales into 100. For net profit after tax, whether that information is given, yes, it is mentioned in the profit and loss account. Debit side net profit as 6 lakh. So 6 lakh divided by 16 lakh into 100, answer will be 37.5%. So very simple 12 mark problem. If you know the formula, you can easily score 12 marks. So next problem we are going to see is of ABC Limited. Following is the summarized balance sheet of ABC Limited as on 31st March 2015. Liability side, equity share capital, preference shares, general reserve, profit and loss account, debenture, bills payable, creditors is mentioned. And asset side, goodwill, building, machinery, furniture, stock, debtors, bank, preliminary expenses is also given. Additional information. Total sales 4 lakh, of which 20% is made on credit. So sale of 4 lakh, out of which 20% is on credit. Gross profit for the year amounted to 80,000 and net profit is 20,000. That is directly mentioned in the problem. Calculate current ratio, liquid ratio, debt equity ratio, gross profit ratio, net profit ratio, and proprietary ratio. First of all, current ratio. As you know, formula is current asset divided by current liability into 100. So in this problem, current asset will be, if you see the asset side, you can directly get the value stock, debtors, and bank. Stock, debtors and bank, that is 90,000 plus 21,000 plus 5,000 divided by current liability. Current liability here, bills payable plus creditor. So 12,000 plus 28,000 into 100, that is 1,16,000 divided by 40,000 into 100, 290%. Liquid ratio. Liquid ratio, next one, liquid asset divided by liquid liability into 100. Liquid asset. In this problem, liquid asset, debtors and bank only. So that is 21,000 plus 5,000 will be your liquid asset divided by liquid liability, that is same as current liability minus bank overdraft. But here bank overdraft information is not given. So that is 12,000 plus 28,000. So 26,000 divided by 40,000 into 100, you will get answer as 65%. Then debt equity ratio. Debt equity ratio, long-term debt divided by shareholders fund into 100. Long-term debt, if you see liability side, only one information about long-term debt is given, that is 5% debenture, 1 lakh. 1 lakh divided by shareholders fund. See, shareholder fund here, equity share capital 2,50,000, preference share capital 1,50,000, add both. General reserve also add it to the share capital 20,000, and profit and loss account information 15,000 also you add. Then minus preliminary expenses given in the asset side, that is you need to deduct 4,000. So 2,50,000 plus 1,50,000 plus 20 plus 15,000 minus 4,000, you will get your answer as 23.20%. Gross profit ratio, gross profit divided by net sales into 100. Gross profit, it is given in the adjustment directly 80,000. 80,000 divided by net sales. Net sales information, total sales they have given 4 lakh. So adjustment is irrelevant. Directly 80,000 divided by 4 lakh into 100, 20%. Net profit ratio, net profit after tax divided by net sales into 100. Net profit after tax is directly given in the adjustment, that is 20,000. 20,000 divided by 4 lakh into 100, you will get it as 5%. Then last one, you need to calculate proprietary ratio. Proprietary ratio is equal to shareholders fund divided by total tangible assets into 100. So here shareholders fund we have already calculated in third formula, that is debt equity ratio, and that is shareholders fund is equal to same thing, 2,50,000 equity share plus preference share plus reserve plus profit and loss account minus fictitious asset. Fictitious asset, if any, that is preliminary expenses is given divided by total tangible asset. Total tangible asset, once you see asset side information, so everything they have given in the asset side. So total asset side balance 5,75,000 minus goodwill. Goodwill is intangible, so deduct goodwill, that is 5,75,000 minus 20,000 and minus preliminary expenses. Preliminary expenses also you are going to deduct. So that is 4,000. Yes. So total tangible asset will be 5,51,000 into 100. So 4,31,000 divided by 5,51,000 into 100, you'll get 78.22%. Yes, this is about 12 mark problem. Once you go for previous one, that is 6 mark problem one we have solved. Once you see that problem, total tangible asset, here we have taken 39 lakh only. So in the third problem, 6 mark problem, proprietary ratio, tangible assets means everything it comes, fixed asset as well as current asset. Yes, fixed asset as well as current asset, everything comes. So here there is one change in the third problem. There is one mistake in the third problem. Total tangible asset will be 3 lakh divided by 6 lakh into 100. So 3 lakh by 6 lakh, what is the percentage? Once you see the percentage here, 3 lakh divided by 6 lakh, whether it is 50%, yes, it is 50%. So answer here will be 50%. For third sum C, proprietary ratio, there is one correction. We have to take all the assets, fixed as well as current asset as tangible asset. Yes, now we have discussed all 12 marks and 6 marks problem. One problem left in this chapter, that is 24 mark problem. So basically in 24 mark problem you need to do all the ratio, that is all 12 formulas you need to calculate. So we'll see this problem. From the following financial statement of Star Limited, calculate all the ratios. Liquid working capital, operating proprietary debt equity, net profit, stock turnover, capital gearing, current ratio, gross profit ratio, debtors turnover ratio, and creditors turnover ratio. So here profit and loss account and balance sheet information is given. So if you see profit and loss account, opening stock, purchases, manufacturing expenses, and gross profit. Credit side sales and closing stock is given. Then administrative selling, debenture interest depreciation, loss on sale of motor car, net profit is given. Credit side gross profit, dividend on investment, profit on sale of furniture is mentioned. Provision for taxation is also mentioned in the profit and loss account. Then balance sheet, liability side, equity share capital, 6% preference share capital, general reserve, profit and loss account, 10% debentures, provision for tax, bills payable, bank overdraft, creditor is given in the liability side. Asset side, goodwill, land and building, plant and machinery, furniture, stock, bills, receivable, debtors, and cash and bank balance is given. So you need to calculate all the ratio. First ratio, liquid ratio. Liquid ratio is equal to liquid asset divided by liquid liability into 100. If you see liquid asset side information given in the balance sheet, liquid asset will be bills receivable is your liquid asset, debtors and cash at bank will be your liquid asset. So 30,000 plus 1,50,000 plus 2,20,000 divided by liquid liability. Liquid liability is provision for tax, bills payable, and creditors, not bank overdraft. We are taking creditors. So current liability minus bank overdraft, you will get liquid liability. So 4 lakh divided by 5 lakh into 100, that is 80% liquid ratio. Then second one is working capital ratio. Working capital ratio is nothing but current ratio, current asset minus current liability, or else current asset divided by current liability into 100. So current asset, in this problem current asset, see, current asset, once you see asset side information, stock is your current asset, bills receivable, debtor, and cash and bank balance. So, stock information 6 lakh plus bills receivable 30,000, debtors 1 lakh 50,000, cash and bank 2 lakh 20,000, divided by current liability. Provision for tax, if you see liability side, 1,76,000, bills payable 1,24,000, bank overdraft 2 lakh, and creditors again 2 lakh. So 10 lakh divided by 7 lakh into 100, 142.86% is your working capital ratio. Third one, operating ratio. Operating ratio is equal to cost of goods sold plus operating expenses. Cost of goods sold plus operating expenses divided by net sales into 100. Here cost of goods sold. How to calculate cost of goods sold? That is sales minus gross profit you can do, or else opening stock plus purchases minus closing stock, plus direct expenses minus closing stock also you can do. So here opening stock, we'll see cost of goods sold. Opening stock 5 lakh plus purchases 11 lakh plus manufacturing expenses 5 lakh plus 5 lakh minus closing stock 6 lakh. So you will get the answer as 15 lakh, or else you can do sales minus gross profit. So sales 20 lakh minus gross profit 5 lakh, again you will get the same answer, that is 15 lakh. Operating expenses. So what and all included in operating expenses for day-to-day operation? So operating expenses, administrative expenses 75,000 plus the selling expenses 50,000. Then what about debenture interest and depreciation? Debenture interest and depreciation is also included as a operating expenses. So debenture interest 20,000 also you need to add, and depreciation is also your operating expenses, that is 60,000. Loss on sale of motor car, whether it is operating expense, no, it is a non-operating expenses in nature. So only four item as your operating expense, 75,000 plus 50,000 plus 20,000 plus 60,000 will get 2 lakh 5,000. So 15 lakh plus 2 lakh 5,000 divided by 20 lakh net sales information, that is 20 lakh, that is given directly in profit and loss account 20 lakh. So answer is 85.25%. Then fourth one, proprietary ratio. Proprietary ratio is equal to shareholders fund divided by total tangible assets into 100. So shareholders fund here, you see the shareholders fund balance sheet liability side, equity share capital 10 lakh plus preference share capital 5 lakh plus general reserve 1 lakh plus profit and loss account 4 lakh, 4 lakh, all four information and divided by total tangible asset. Total tangible asset, if you see all the asset minus goodwill, all the asset minus goodwill, so 29 lakh minus 5 lakh. So 24 lakh. 20 lakh divided by 24 lakh into 100, you will get 83.33% debt equity ratio. Long term debt divided by shareholders fund. So long term debt here, long term debt, if you see liability side information, long term debt is 10% debenture is given. So that is 2 lakh. Any other information about long term debt? No. So no other information about long-term debt, 2 lakh only debenture divided by shareholders fund. Shareholders fund is calculated in the previous formula itself, directly 20 lakh, preference share, equity share, general reserve and profit and loss account. You will get the answer as 10%. Next, net profit ratio. Net profit after tax divided by net sales into 100. So net profit after tax they have asked. So net profit, this is net profit here they have given 3 lakh 20,000. 3 lakh 20,000 as a net profit they have given, but there is a tax information. So this is before tax. This is net profit before tax. So net profit after tax means 3 lakh 20,000 minus 1 lakh 76,000. 3 lakh 20 minus 1 lakh 76,000 will get net profit after tax 1 lakh 44,000 divided by net sales into 100, that is 20 lakh directly given. So 1 lakh 44,000 divided by 20 lakh into 100, 7.2%. Before tax is given, you need to deduct provision for taxation given in profit and loss account. See, provision for taxation is given 1 lakh 76,000, that you need to deduct from net profit. You will get net profit after tax. Next is stock turnover ratio. That is cost of goods sold divided by average stock into 100. Cost of goods sold is nothing but sales minus gross profit. You will get it as 15 lakh. And average stock. Average stock, if you see whether there is a closing and opening stock and closing stock information is given. See, opening stock information given in the problem is 5 lakh. Closing stock information given in the problem is 6 lakh. So 5 lakh plus 6 lakh divided by 2, that is 11 lakh divided by 2, you will get 5 lakh 50,000 as your average stock. So 15 lakh divided by 5 lakh 50,000 into 100, 272.73%. Next is capital gearing ratio. Capital gearing ratio is equal to fixed interest bearing fund divided by equity shareholders fund. So here fixed interest bearing fund divided by equity shareholders fund. So once you see liability side, fixed interest bearing fund, what and all information, only preference shares capital and debenture is given as a fixed interest bearing fund. So yes, preference share capital 5 lakh plus debenture value is given. So total will be 7 lakh is as your fixed interest bearing fund divided by equity shareholders fund. Equity shareholders fund, equity share capital, reserves and surplus, and profit and loss account. That is 10 lakh plus 1 lakh plus 4 lakh, total 15 lakh, excluding preference share capital, because they have asked equity shareholders fund. So 7 lakh divided by 15 lakh into 100, 46.67%. Then current ratio, current asset divided by current liability into 100. It is nothing but we have already calculated as working capital ratio. Same calculation you need to show for current ratio as well. Same thing. Then gross profit ratio. Gross profit divided by net sales into 100. Gross profit information is given in profit and loss account as 5 lakh. 5 lakh divided by net sales 20 lakh into 100. 5 lakh divided by 20 lakh into 100 will be 25%. Next, 11th one is debtors turnover ratio. Debtors turnover ratio is equal to, that is net credit sales divided by average average debtors into 100, or else total sales divided by closing debtors into 100. Total sales given in the problem 20 lakh, closing debtor given in the balance sheet. If you see properly, closing debtors is given in the balance sheet 1,50,000. There is no other information about debtor. So we are applying this formula. 20 lakh divided by 1,50,000 into 100. 1,333.33% will be your answer. Next, creditors turnover ratio. Creditors turnover ratio is net credit purchases divided by average accounts payable into 100. So net credit purchase information. Now again go for P&L account, purchase information 11 lakh. Given in the question itself, so directly 11 lakh trade purchases divided by average accounts payable. That is nothing but creditors plus bills payable, whether it is given in the question. Creditors, yes, 2 lakh plus bills payable 1,24,000. Only those two accounts for average accounts payable 3,24,000. 11 lakh divided by 3,24,000 into 100, you will get it as 339.50%. So this is the 24-mark problem involving all the calculation, includes all 12 formulas which is mentioned in your syllabus. If you solve this problem, you can solve any type of problem. And in case you are attempting the theory question, then there is one question which is asked repetitively in your examination that may come for 6 or 12 marks. What is ratio analysis and what are its uses and limitations? So what is ratio analysis basically? So it is a mathematical calculation, or it is a mathematical relationship, or it is an act of showing mathematical relationship between the two numbers. Suppose there are two numbers, how it is related to one another. So that is known as accounting ratio or ratio analysis. So what are the uses of ratio analysis? Why ratios are done? Why it is needed? Or what are the advantages of ratio analysis for demand forecasting, for future projection, for everything we want, and to estimate the financial statement, whether it is a solvency concern or insolvency concern. To know that we want ratio analysis. And what are the disadvantages of ratio analysis? It depends on figure, and figures can be manipulative. And accounting procedures adapted may not be same for each concern. So in some concern, they may adopt some different procedures, and in some other concern, they may go for some other procedures. So we cannot depend entirely on ratios. So that you need to find out uses and limitation and write in your own words. And ratio analysis, I already told you meaning of ratio analysis. So this is all about ratio. Thank you for watching the video. We'll come with another video very soon. Thank you.